Hey, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another live trading explanation video of those trading setups which I have shown you in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot more concepts which can be used also for Forex and digital options, which I show you in the near future. So get this ebook, it's for free, and you find the link in the description, because I get often the question, where do I find this ebook? This ebook is in the description, you find the link there. It's a PDF file. So let me see if I can show you now some trades of those things which I have explained, those trading setups. But before I gonna explain you the trading setups, I have to tell you first of all the things which are required to understand those trading setups which I have explained. Are those things here about the candlestick math. Here at the top of every page of this ebook, you'll find a link to a YouTube video which explains those concepts which are described here further. Get this ebook, watch the video related to understand the concept, because they are all correlated with together, and that is the reason why it's so distinct, because they are really important, and you have to understand the whole concept, not only one part. You have to understand everything, and that is once the candlestick math, twice the or second the rejection itself. Yes, also if I'm explaining you trading setups without any kind of rejection, you have to understand that the rejection is still a really important part, yes, which is really important, and that gives you some more odds on your favor, yes. And that is what's about this. So get this ebook, watch the related videos, yes, and then let me see if I can show you. So this about this with the trend, support and resistance area, and the candlestick pattern. Then watch the video about the market condition, because we are talking about two different types of trading setups. One are the continuation trading setups, and the other ones are the reversal trading setups. And the reversal trading setups you have to trade almost here in that kind of scenario, yes, in this healthy market scenario, uptrend or healthy downtrend. The continuation trading setups you trade them almost in the strong downtrend or strong uptrend, and in this consolidation area you do not trade any kind of those trading setups. I would not to recommend to anybody to trade at this kind of market. When market is consolidation area, only if market is going to break out of those kind of support and resistance area, yes, then you can trade in direction of the upcoming trend. Then we have here the third thing, that is a trend identification based on EMAs, yes, and that market is moving in waves, yes, and that is what you have to understand too. And then last but not least, the rejection again, where I have explained the importance of the rejection, and that rejection is makes only 20% of the success of any kind of trade. But if you have a trading setup which has included all those four kinds of things: the trend, the support and resistance level, the major key level, and the candlestick pattern, and the rejection, you have approximately 80% of success rate that your trade will work. Also, if you don't, if this trade will not work, you have done everything right, because market is unpredictable sometimes. And so also, if you do everything right, you can lose. So you don't have to blame yourself, as if you are doing those trades based on those four things. You have the right habit, and you are doing the right things when you trade. So then watch the video about the breakout, which I can only recommend to anybody. That's a reason why I'm repeating this over and over again. For those one who sees this video first, this video, this breakout, fake breakout things, yeah, is showing the only example of those things, how a fake breakout could look like, yes, but you have to imagine that this could look like also a little different, but that is what is happening here. What happens here? You see it's a third edition. I don't know why it's loading again. It's loading really. I have to stop the video 1 second. Okay, I don't know what happened here, yes, but no problem. At the end, this is what's about this. The thing is that you have to understand that this fake breakouts could look also in some kind of different, yes. It will not look like this, yes. It could look really different to this, but you have only to understand that there's some kind of fake breakouts which will happen, and then you are aware of it. And when you are aware of it, you can prevent if you see some kind of setup coming up. So then the last video which I can recommend to watch and also to understand the concept behind this is this video, where I'm going to talk about reversals and retracement. And if you have understood those 5-6 concepts which I'm naming now, you have the basic skill, you have the basic knowledge about those things, how to trade those setups, trading setups which I'm explaining now. Yes, because here you have the 5-minute time frame, and this retracement on the 5-minute time frame of this uptrend is in reality in 1 minute time frame, in the lower time frame, reversal. And that is what you have to see. That is what you have to understand. That is what the big boys see. The big boys see this uptrend with a little retracement, and the small boys see this kind of reversal and could think that it will go down further. But in reality, this is only a retracement, and that's the reason why we are going up again. That is the reason, yes. And that is also what is the Elliott wave principle about, yeah, about it's going one wave, the impulse waves, the corrective, and the impulse wave, and the corrective, and the pulse. But this is not valid, but you can watch this video about the Elliott wave to understand those concepts here and closer. So that now I'm going to show you some trades based off those things which I have explained here with this trading setups. And now I'm going to show you here what's the main common part here is if you have this continuation pattern, yes, where the color of this arrow is similar to this, that means it's a continuation pattern. If the color is different, this is a green arrow uptrend, and then we are going to get a reversal. That is a reversal pattern. That is a reversal trading setup. This is a continuation trading setup. This is a reversal. This is a continuation, 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 reversal trading setup, and a continuation trading setup. Continuation trading setup we will do also and always in some kind of strong trend. Yes, and the other one here, the reversal ones we do almost in a healthy market. Yes, healthy market means with areas where price retrace. Yes, and healthy market, healthy trend. I say healthy trend because at the end market is trending or not trending, and it's important that it trends, because else we would not have this healthy trend. So I will do this in this manner. So I have done this also, so you understand where you have to apply such kind of trading setups. Okay, so let me see. Healthy trend, and here I have to show you the other ones. Here you see that here is the same valid on the other ones. Here this is a reversal trading setup, reversal, continuation, continuation. Yes, it's the same as valid for this below, because there are only vice versa. This is a reversal, 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 and here we have a continuation, reversal, reversal, and continuation. Yes, that is what's all about. So let me see. I will show you now an example here of this one, and you will see that it will look different. Yes, it will not look like this. Yes, but it is this, and I will gonna. This is why I'm doing this kind of live trading examples. Yes, because it's important that you understand that these are only images which are showing the concept, not that you have to wait and memorize candlestick for candlestick pattern. Yes, you have to understand the concept, and when you understand that concept, you could also apply this to every kind of candlestick pattern when they are the concept behind understood. So let me see, I will show you this scenario, and you see here we have a long, huge, big candles. Yes, but what is important is this area here, which will create it by this kind of candles. Yes, a red one and a green one, and there is a small reversal here, and this reversal here, also this retracement here, is this one which creates here some kind of resistance area. So I'm going to show you now this in the video, and you see here the scenario. You see the scenario here. This is this one. Yes, and we are talking about this scenario here. Yes, this scenario, this candle and this candle are those two here. Yes, we have a downtrend which started here on this candle. Yes, because we touched here some kind of Fibonacci level or resistance area. I don't know what it was. Yes, but this was the initial of an upcoming downtrend. Yes, because it doesn't continue. Yes, and then this comes the green candle here. Yes, and we are going away from the 2 Bollinger Band, and then it's coming the red candle which close below this level here. Yes, it's close below this level, and that is now a new resistance area. Yes, these 2 wicks are creating a new resistance area, and I'm going to show you this now. And you could enter immediately into a put after such a kind of. So let me see. I will do play now. So we are switching there, and you see we have this scenario, and it's going down now. Yes, it's going down. And I entered into this trade, but you could enter immediately into this trade. And you see, I entered into this trade because this kind of area will act, and you see, it acts like a resistance area. Yes, and that's the reason why this will work out. Obviously, I have not taken care about the expiration time. The expiration time was too early, but you see here that this candlestick worked out. Yes, it would work out also if you enter immediately, because the closing price of this candle is below the 2 wicks of these 2 candles here, which create a resistance area. Yes, and that is why this immediately, and you see it's not looking like this one what I have shown you in the ebook, but that is the important part, that you have to understand the concept, that those 2 wicks are creating a resistance area because this broke through this area, and then you can enter immediately into a put because this area will act as resistance for the next candle, and that's the reason why this worked out here. And that is the first example what I tried to show you, and after this I'm gonna show you another one. So this was this one, and you see how this area here worked as resistance. This, you see this wick here, it got rejected from this area and it's gone down. Yes, and that is why it worked, because you see here, first it was resistance, then it broke through this resistance here, it broke through this level. As you see, these 2 wicks created a resistance, it broke through this level, it was broken, then this resistance here worked as support. Yes, and after this support was broken by this candle, it's act again like a resistance, and that is the principle of polarity and of supply and demand. And this is when you do those trades, they are always good, because you have used support and resistance for your trade. And obviously this candle looks also like, and it was already in some kind of reversal. So let me see if I can show you another example. This was a nice one, because here you have seen that it could look also different from those one. You see, this is what I'm showing you here as images. Yes, but the reality is always looking different. So I will look for another example to show you this. Okay, I'm back again. So the next example is one what we have seen already, and this is this one here. It looks like this one here again. Yes, this is what we know as as evening star. Yes, this will create an evening star. I have shown you already, I think, in the last video 3 or 4 times this kind of scenario. This is one really popular. I use this really often. Yes, and I'm gonna show you now this kind of scenario. You have in mind how it works. Yes, you have an uptrend. Yes, and by the way, I can show you also two in this trade. Yes, because you can see here, for example, here is also, so we get, as first of all, this is a video, and you see, first of all, you see this kind of scenario here. Yes, this is this one here. So we have the uptrend, then we get here a green candle, a red candle. These two candles are creating here some kind of support area, and this candle breaks through this support area. Yes, and then the next candle would be in the money, and you can enter also immediately because the distance between, let me see this, because the distance between this kind of closing price and this area which was created by those two candles is closed, and you see how this candle here is reacting on this kind of area, and that is why it works. Yes, you see it now, the vice versa. Yes, the other side of this trade. So the first of all it was this trade, yes, and now we have this trade, and now I'm going to show you that what I want to show you, and that was this trade here again. And let's see if I can show you this again, so you get a feeling and to understand how it looks like. So this candlestick, for example, I have to show you this. This candlestick is showing some kind of huge and great buyer pressure. Yes, this is what's up. But we have here, you see here this gray line. This is a round number. This round number, this whole number, round number, call it like you want, is here, and this acts like a resistance. So, like I have shown you here in this ebook, yes, you have here this resistance, and this is what the round number is about, yes, and I told you important is the distance between the resistance area and the crossing of this doji. I will do play and then you will understand what I'm meaning. So you see here, it's a doji which we're creating now. Yes, I'm drawing, I try to draw something, a Fibonacci level, to understand if we are going higher or not. Yes, and you see it's got a crossing there. So we got the doji, So it now would be already a point, yes, to get into a put. But I was busy by drawing this Fibonacci level and I didn't have it. But this is the scenario. You see how this wick is crossing the round number, this wick is crossing the round number and stopped above on the same level like I have explained here in this ebook. Yes, you see this wick here, this wick, and this wick here are closing to the resistance, yes, and are creating some kind of resistance area, yes, and that is what this is about, yes. They are creating here a resistance area, but the round number is closer, so you could do immediately here on this trade, immediately a put, because this kind of area will create such a strong resistance area that it will go down. So let's see. I enter immediately without any rejection. You have seen I don't have waited for rejection. Price tried again to go up, but was not able to this because we have here a strong resistance created, yes, and that's the reason why this put will work out at the end, because of this kind. I don't know what I changed, maybe from that I had to change in English. So, and you see, it tries again to go up, but this area is a resistance area, and that's the reason why then it's going to shoot down, because this candlestick have created a strong resistance area. And that is the concept behind this. And if you see some kind of so setup, you know that you can enter immediately, or you wait for a rejection. That you can also wait for a rejection, because if you have the rejection, like I explained to you, you have 20% more of your success rate, because a rejection is always good to have, yes, but because here you could do this, because the distance from this area to this doji, crossing doji, is a little bit far, more far, so you could wait also for a rejection. But this is the concept behind this, and that is what I tried to explain you. So let me see if and this was also 3 months ago. 4 months ago, maybe 3 or 4 months ago. So, okay, I would say this would be enough, as the video will be too long and no one will watch it. So I would say, if you like this video, do a like. If you didn't subscribe, subscribe. Get this ebook, practice those trading setups. Understand the concepts which I have explained, that are maybe 55 pages of price action stuff in the ebook. Get this ebook, study it. Yes, there is everything explained what you need to get profit out of the market. I wish I had some kind of ebooks when I have started this. That is the reason why I have done this, and so I hope you will use it wisely and practice it, study, and I would say, if you like this video, do a like. If you didn't subscribe, subscribe, obviously. And if you have something to say, any comment, let me there a comment. I'm happy when I can answer your questions. So I would say, stay safe and bye-bye.